Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So, ladies and gentlemen, the moment you've all been waiting for, Ark Invest have dropped their new Tesla stock price targets. 2025 price target for the base case, $3,000 per share. Yeah, $3,000 per share for Tesla stock in 2025 in Ark Invest's base case. The bull case, $4,000 per share. Even the bear case, in which many things go wrong for Tesla, still comes out to $1,500 per share for Tesla stock in 2025. So in this video, I'll run through Ark Invest's new research on Tesla stock, how they've come to their new updated price targets for 2025. I'll add my thoughts and opinions where I feel it's relevant. And by the way guys, just for the record, last time Ark Invest updated their Tesla stock price target and valuation model was on a weekend, and the stock was up, I think from memory, around 19% the first trading day, aka Monday after the Ark Invest price target was released. Now, many other factors could have contributed to that as well, but I just wanted to let you guys know Monday could be interesting. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. And here we are, Ark's price target for Tesla in 2025, research by Tasha Keeney. Last year, Ark estimated that in 2024, Tesla's share price would hit $7,000 per share, or $1,400 per share, adjusted for its 5-for-1 stock split. Based on our updated research, we now estimate that could approach $3,000 in 2025. So just jumping in here, effectively in the span of a single year, Ark Invest's base case for Tesla stock has doubled in value from $1,400 per share 2024 to $3,000 per share 2025. To arrive at this forecast, Ark used a Monte Carlo model with 34 inputs, the high and low forecasts incorporating 40,000 possible simulations. Our bull and bear price targets are the top and bottom quartile outcomes from the simulations, as shown below. Ark's predicted scenarios. Expected value in 2025, this is the base case, $3,000 per share. Bear case, $1,500 per share, and bull case, $4,000 per share. Ark are assigning a 25% probability to the bear case, 25% probability to the bull case, and that expected valuation is the middle range there. With no single bear and bull case from our 40,000 simulations, we have selected what we believe to be a plausible case for each one, as shown below. Estimated values in bull and bear case, example cases. So we've got 2020 stats down here, I'll skip all of those, and now we've got the example bear case 2025 versus the bull case in 2025. Now some interesting notes here, let's run through these line items. The average selling price in Ark's bear case, $45,000 per vehicle. The average selling price in the bull case, $36,000 per vehicle. Why would this be? Why would the bear case have a higher average selling price? Well, there's 2 parts to this. 1, it suggests that Tesla hasn't been able to drive their costs down. And 2, it suggests that Tesla hasn't been able to reach the mass market, which is a function of driving those costs down. We can see Ark estimating 5 million units sold per year in the bear case in 2025 at a $45,000 ASP. 10 million cars sold in 2025 at a $36,000 ASP. Electric vehicle revenue in the bear case, $234 billion versus $367 billion in the bull case. Insurance revenue, $23 billion in the bear case, only $6 billion in the bull case. Again, you might think, wait, what the fuck? What's going on? I don't understand. Well, we'll get to that in just a moment. Human-driven ride-hailing revenue. In the bear case, $42 billion in 2025, and in the bull case, 0. And why would this be? Well, we'll get to that in just a moment. Autonomous ride-hail revenue. In the bear case, $0. In the bull case, $327 billion of autonomous ride-hailing revenue. In this scenario, with human-driven vehicles, I suspect Ark are assuming much higher insurance premiums because humans, we're pretty shitty drivers compared to a superhuman full self-driving software package that Tesla's likely to have very soon. Therefore, higher premiums because worse drivers on average. If Tesla doesn't solve autonomous vehicles, Ark are anticipating in the bear case that there'll be human-driven ride-hailing revenue, people will use a service similar to Uber and Lyft, etc. And I think this is a great fallback solution. If in the extremely unlikely event that Tesla can't solve autonomous driving, at least they can allow people to drive others around, similar to Uber, etc. Lower total cost of ownership and operation for the drivers. So there's a pretty viable business here if Tesla can't solve autonomy, but I don't think that's a likely outcome. If Tesla does solve autonomy, I suspect that insurance premiums are going to fall off a cliff because there's going to be far less accidents, and your premiums really are a function of your payouts over time. So if you're paying out less because of less accidents, then you're going to charge less for premiums for insurance. Makes a lot of sense. Where things get really interesting here is the market capitalization. In the bear case, 2025, Tesla market cap $1.5 trillion, and in the bull case, $4 trillion, equating to a $4,000 per share stock price for Tesla. Even in the bear case, once again, $1,500 per share, more than a doubling from where we are today. Now we have some key assumptions for the bull and bear cases that we just looked at. Capital efficiency per vehicle, this is really important. Ark in the bear case are assuming $8,000 of capex needed, as in money you need to spend per vehicle you can produce. In the bull case, this is just $6,000. And just jumping in here, in my opinion, I actually think that the bull case over the long term may be quite bearish. I can see Tesla continuing to drive their capex costs down to staggeringly low rates compared to industry averages. So who knows how this will play out. But I think, honestly, the discrepancy between the bull and the bear here, it's probably not wide enough. But of course, these are the scenarios that Ark have just pulled out as the most reasonable. They've modeled many other scenarios as well. And this is a great one. Maximum annual production increases in how quickly can Tesla scale up production. In the bear case, Tesla scaling at a maximum of 65% per year. In the bull case, about 90% per year. And just keep in mind, let's think about this. Tesla today has two factories operating, right? You've got the Fremont factory in the US and the Shanghai factory in China. Simultaneously, they are constructing a Berlin factory, production set to begin in the second half of this year. And the Austin factory, production set to begin late this year, maybe early next year. So, in the span of about 12 or so months, we're going to see Tesla's production capacity literally double. So this 90% scenario, very reasonable and realistic. Remember, Tesla can keep building factories at a ridiculous rate. They've got plenty of capital. They're not going to need to go to market to build the next 3, 4, 5, 6 or 7 gigafactories, should they not want to. So this means that Tesla, at their will, can scale. The only limiting factor at this point, as far as we know, is battery cell constraints. Once they solve the cell constraint, Tesla can scale at stupid rates. Percent of all Teslas on the autonomous platform in 2025, the bear case of course 0 because they're assuming it doesn't get solved, and in the bull case 60% of vehicles being used at least part-time on the autonomous platform. Key updates to our model. We pushed our forecast price target forward 1 year to 2025. We refined our estimates for Tesla's capital efficiency. We added Tesla's insurance business to our model. We added assumptions for human-driven ride-hail service. We increased the probability of Tesla achieving fully autonomous driving within 5 years. And for anyone who's seen any of the latest full self-driving beta videos, you'll understand Tesla really is on the cusp of solving this really difficult problem. Electric vehicles. Since our 2024 analysis, we have increased our assumptions for Tesla's capital efficiency. Previously, we estimated that Tesla would spend $11,000 to $1,600 per incremental unit of capacity in 2024. In 2019, Tesla spent $1.33 billion on capital expenditures and produced 509,737,000 vehicles, an increase of 144,505 vehicles from the previous year, suggesting that its capex per incremental vehicle produced was roughly $9,200. In 2020, the following year, Tesla spent $3.16 billion on capex, putting capital efficiency in 2021 at $10,330, assuming a 60% increase in vehicle production. Note that this math probably overstates the capital required for an incremental vehicle because a portion of capex is for long-dated projects like autonomous data centers and Tesla's vertically integrated cell factory. In other words, some of the money that Tesla's spending today, they're not really recouping that in terms of volume, but in the future they will. Overall, that's going to drive the total capex per vehicle down over time, but Tesla's still investing heavily today. At Battery Day, Tesla announced that its updated battery cell chemistry and manufacturing process would reduce investment costs by 75% over time. To give Tesla credit for what we believe is its superior capital efficiency, we lowered gross capital expenditure per car in our latest model. Given these updated estimates, along with an additional year of growth added to our model, our forecast for Tesla's unit sales is between 5 and 10 million vehicles in 2025. And I just want to jump in here. Let's bring up my own production estimates to see how closely they align with where Ark Invest is at. Alright guys, here we are. This is my production capacity. This is not how many vehicles are actually produced, but how many could be produced in theory if there was no downtime and they operated 24/7. 2025, I've got close to 10 million units of production capacity. My bull case for actual production in 2025, almost 8 million vehicles, and my bear case for production in 2025, around 6.6 million units. So we're kind of in the ballpark, but Ark's bull and bear case an even wider gap between my own. Insurance. Ark estimates that Tesla could achieve better than average margins on insurance thanks to the highly detailed driving data it collects from customer vehicles. Partnering with underwriters, Tesla introduced its insurance product in August 2019. Currently, it is available only in California. Ark believes that in the next few years, Tesla could roll out its insurance offering to more states, underwriting its own insurance policies. Because its vehicles have better than average safety profiles, Tesla should be able to use real-time data to offer insurance in its vehicles, pricing it dynamically, lowering customer acquisition costs and increasing margins. Now, for those of you guys who haven't already seen my Tesla insurance videos, I'll put a card in the corner. I highly recommend you guys watch this deep dive, really understanding why Tesla insurance can undercut everyone on price and why overall it will just be a superior product. In short, Tesla insurance for 99% of customers on planet Earth will be an absolute no-brainer once it's available in their region. Relative to Progressive's 13% EBIT margin in 2019, Ark estimates that Tesla could achieve margins close to 40%. If it were to sell 40% of vehicles with its own insurance offering by 2025, Tesla's insurance revenues could approach $23 billion annually in our bear case. In our bull case, Ark estimates as robotaxis ramp, Tesla's insurance revenues will be incorporated into a platform fee. Insurance boosts our price target by roughly $60 in 2025. Fully autonomous ride hail. In our last valuation model, Ark assumed that Tesla had a 30% chance of delivering fully autonomous driving in the 5 years ended 2024. Now, Ark estimates that the probability is 50% by 2025. Since our last forecast, neural networks have solved many complex problems previously considered unsolvable, increasing the probability that robotaxis are viable. Ark estimates that Tesla's vehicle fleet gives it access to 30 to 40 million miles of data per day, up from 20 million per day last year. If successful, Tesla could scale its robotaxi service rapidly, allocating the additional cash in turn to manufacturing capacity serving its autonomous network. If 60% of its vehicles equipped with autopilot were to serve as robotaxis, Tesla could generate an additional $160 billion in EBITDA in 2025. In our bull case, ride hail would account for the majority of Tesla's enterprise value in 2025. Note that autonomous driving pushes the distribution of our expected price targets up significantly, as shown below. The first chart represents the likely distribution of all possible price targets from our Monte Carlo analysis, while the second chart shows which scenarios occur within the ranges of price targets across our distribution. So let's just try to understand what we're looking at here. This is just a distribution of all of the different scenarios here. The median value there, $3,000. But look at this, quite interestingly, right? We've got about a $3,000 range between 0% likelihood and 50%, right? $3,000 range. Yet the second half of this, the models run up to about $28,000 per share, okay? One of the Ark scenarios, the hyper bullish scenarios, everything possible goes right, $28,000 per share. $15,000 price range. So as you can see, autonomy in particular really heavily skews Ark's valuation. And now we're having a look at the scenario mix within price ranges. So basically what we're looking at here in the grey, this is a scenario in which Tesla production doesn't exceed 4 million vehicles and they don't meaningfully sell into vertically integrated ride-hailing or deliver on robotaxi. The green scenario here, Tesla produces more than 4 million vehicles but doesn't meaningfully sell into vertically integrated ride-hail or deliver on robotaxi. The black scenario here, Tesla incorporates vertically integrated ride-hail but doesn't deliver on robotaxi. And then the purple here, Tesla delivers on robotaxi. In Ark's Tesla price target, please note that electric vehicle and robotaxi business lines generate roughly 40 and 50% of Tesla's expected market cap, the average values from our Monte Carlo simulation respectively in 2025 as shown below. So we've got revenue by business line showing here that electric vehicles are making up the vast majority in this scenario, robotaxi making up a decent slice, call that about a third or so, and then you've got a little bit from human-driven ride-hail and insurance. EBITDA by business line. We've got electric vehicles comprising much less of total EBITDA, robotaxis comprising a much larger chunk, human-driven ride-hail and insurance, yeah, not too much in either of those cases, and this one is really important, market cap by business line. We can see robotaxis dominating, taking up half of Tesla's total market cap, then about 40% for the electric vehicle sales as well. And the final 10% of this market cap, a combination of human-driven ride-hail and insurance. So we can see quite clearly here that the valuation heavily skews based on robotaxi. Tesla doesn't get there, the valuation is going to be nowhere close to this in Ark's opinion, and I tend to agree. I think a huge amount of Tesla's future market cap is contingent on solving autonomy. Conclusion. Given the updates outlined in this blog, Ark's 2025 price target for Tesla stock is $3,000 per share. Ark's bear and bull case suggests that Tesla could be worth roughly $1,500 and $4,000 per share, respectively. I gotta jump in here for a sec. Don't you love the fact that the bear case, as in so much shit goes wrong, is still $1,500 per share? That's over a $1 trillion market cap for Tesla, if everything goes wrong. We published our model on GitHub and invite you to test your own assumptions and or craft visualizations from the simulation outputs for our assumption. By the way, guys, I'll put a link in the description to the GitHub model as well. I highly recommend you guys check it out. It's fun, it's detailed, it's meticulous. It's really great to play with the numbers, look at Ark's assumptions in greater detail. If I ran through that here, this video will be about 69 hours long, so I decided not to today, but I highly recommend you guys, if you really want to get into the weeds, look at the details, look at the number, get a thorough understanding of how Ark came to these conclusions, check it out. And this final note has to be my favorite part of Ark's entire valuation model and the new Tesla stock price targets. Note, we do not model Tesla's utility energy storage or solar business in our models. We also have not modeled Bitcoin assumptions in our model. In other words, this is just based on vehicles, not including Tesla's energy business. And we're at $3,000 per share in 2025 in the base case. So there we have it, folks. Ark Invest's new updated Tesla stock price targets for 2025. If everything goes wrong, the bear case, $1,500 per share, still more than a doubling from where we are today. In the base case scenario, $3,000 per share for Tesla stock, and in the bull case, $4,000 per share in 2025. Now, I know most of you folks watching the channel will be like, oh yeah, cool, that sounds reasonable. I think, however, the reaction from the mainstream finance media in the broader market is going to be really telling. As I mentioned earlier, last time Ark Invest dropped their Tesla stock price targets, the next trading day the stock moved almost 20%. There may have been other factors involved there as well. I'm really curious, however, to see how the market reacts this time. Why would that be? Well, last time Ark Invest dropped their research on Tesla, everyone thought they were morons, everyone thought they were insane, everyone thought they were deluded, everyone thought they were wrong until they weren't. Over the last 12 or so months, we've seen Tesla stock head to the moon, and suddenly Ark Invest have transitioned from being the laughing stock of Wall Street to now being in a position where they can point and laugh at Wall Street. There are millions, literally millions more people now paying attention to what Ark Invest and Cathie Wood have to say because they've been proven correct when their predictions a year or two ago sounded absurd and now they've played out. So this could really send shockwaves through the market. Again, I have no idea what's going to happen in Tesla stock on Monday, Tuesday, Wednesday, Thursday, but I'm pretty confident it's not going to be a boring week. Let me know in the comments below, what do you think about Ark Invest's new price target on Tesla stock? Do you think in 2025 Tesla stock's likely to hit that $3,000 base case? Maybe it's higher, maybe it's lower. What is your price target for Tesla stock in 2025? And I really do read all your comments, so I look forward to seeing your thoughts and opinions about Ark Invest's new Tesla stock price target. And speaking of reading all the comments, a couple of weeks ago somebody left a great idea for some new Ark Invest themed merchandise. So introducing What Would Cathie Do merchandise. Great wordplay there. Thanks for the idea. I love this. If you guys would like to pick up your own shirt, long sleeve, hoodie, check out the link in the description. Just having a little bit of fun here, but hopefully these will stimulate some really interesting conversations. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.